has been started the microinsurance initiative since 2006, and at the moment we started the upselling initiative. These are the portfolio of our the numbers of our portfolio. We have 76 credit life partners. There are MFIs, banks, and some other institutions, but still the basic business is giving the loan to the customers. And at the moment, we have 2.7 million loan insured. This number is quite huge, but comparing to the whole number of Indonesian population, which is 250 million people, is like a peanut maybe. And yes, every month we can collect a new member with 220,000 new members, and the average premium per person is 0.5. This is the premium that paid for the credit life insurance, and the monthly GW premium that we can collect is about $110,000 US. Having this kind of portfolio, we still say that we are staying in the comfortable zone. We call it as a credit life trap. As maybe earlier mentioned by Double, credit life is a kind of a very low hanging fruit that I think every company could do this kind of business. But if we only focus on the credit life, and then we will fail to expand, to give value to customer, and also to reach our long-term company strategy. That's why we call, if we only stay in the comfortable zone of the credit life, it is a trap for us. And if we look further what the trap is meaning for us, because the credit life, in one side, it can quickly penetrate the market. But in the other side, the awareness is very low. There are two sides of this fact. The fact number one is digging deeper by thanks to Michael McCord, who also helped us to do the study of the milk. You can read in the internet maybe, the milk number 36. The finding of this research is that even though credit life has so many criticism out there, but it still have a value for customers. The study found that the loan forgiveness component covers on average 23% of the various outstanding loans. And it also helps beneficiaries to almost completely avoid financial difficulties. And the last, the covering the spouses, mostly male, would create even more social impact and also premium for insurers. But on the other hand, we know that the awareness is very low. The awareness to the insurance itself, as well as the awareness to the insurers for Allianz. There are only 45% of our credit life customers who are aware that they are insured, and only 20% they are aware that they can point out that Allianz is their insurance. So, by having this kind of background, we tried to start our experiments in doing the upselling. This is not a brand new thing, this is not a fancy thing, but anyway, we have a lot of lessons learned there. The basic motivation of our company to do the upselling effort is to bring our long-term strategy to life, which is grow with the customers. I know every company having the same spirit, grow with the customer, but how we execute that is another problem. This is a sample that I pick up from the ground to just give you the illustration on how we sell the voluntary product on top of the mandatory policy. We call it as a tick-box product because we sell a simple voluntary product to the customer that they are about to renew the loan or to apply the new loan. As you know that this kind of loan is offered are facilitated by the loan officer of the MFIs. And at the time they fill the application, the loan officer will offer or will say that now you have already covered with insurance that will settle the debt if something happened with your life, which is the in the event of death. Sorry. This is the way how the loan officers offering the voluntary product, thus offering them to extend the cover of insurance by only ticking the voluntary product. And once they tick the voluntary product, and then at the moment they will be converted from the mandatory or the group compulsory customers into our individual customers. That's the basic idea. And also to give you the more detail about the product that we offer in the big box scheme, there are only three basic and simple products. Number one is the personal accident, number two is the hospital cash plan, and the other one is the housing insurance. This product is actually not the product that at the beginning designed to be distributed in the microinsurance market, because we know, as maybe we discussed yesterday, that to convince our actuary to have a new product that dedicated to the microinsurance market is another problem. So we just tried the quick and dirty route to only downsizing our conventional product and adapt it to our microinsurance market. And this is the idea to how illustrate the product. And also, if you can see here, this is the way that the loan officer explaining about how insurance principles work, and also how to link the consumer education to the product that we try to offer. The next question is, what is the result of our upselling effort? During 12 months of the pilot, we have 4 pilot partners. Roughly we calculated that there are 12,000 people that can be reached from that kind of effort. And approximately, in average, we converted 5% of the person who took the voluntary product of microinsurance that we offered. But if we take a look deeper on the difference, deeper and behind on the 5% number, we can differentiate 2 groups of pilot partners. Group number one is the one who really records a higher customer conversion rate, and the other is the ones that we call that the customer rate is not really high. We learned that from the group of partners that successfully convert the customers, the most important thing is they show high trust level with Allianz. We know that this kind of offer, this kind of initiative could not be offered to our MFI partners only in 1 or 2 months of relationships. Beforehand, we have quite a long experience where we can build trust each other. The other difference is because the successful partners make the insurance talks as a clear part of their system operation and procedures. And also, each frontliners clearly instructed to explain the tick spot. This is something that we cannot do by ourselves, because of course we do not have so many agents to be deployed out there to do this kind of job. And instead of driven by the commission income, the successful partners, they were more focusing on the value proposition enhancement. This is something that not can really found in each of our other partners. that's also the challenge that I will mention later. And the unsuccessful partners, we found that there were no clear rules on how to manage the commission. And also, the commission itself might not really attractive for the loan officers. Yeah, it's because in this project, we are not talking about thousands number, about 100,000 number, but maybe only small number of conversions. And also, the commission itself is still very small. And the last is the field level staff did not really aware that about the importance of having insurance as part of the MFI's customer value proposition. What is the lesson that we learned from this pilot effort? Number one, and then the most important thing is that the customer conversion the customer conversion works. Previously, we assumed that maybe some of our customers are really need the product, but how the way we offer the product is also a big question for us. And furthermore, we actually have a pilot in the pilot. What I mean with the pilot in pilot, that is the moment when after some of our customers have become the individual customers because they are converted to the individual customers, and the insurance cover has expired, we try to have an offer like a telemarketing. That's mean that I say that the telemarketing way is a feasible method to doing this kind of business, but it's also to check whether this customer is really accept our another offer with another way. And we found that these customers are not the people that quite a lot receiving offer from other telemarketing channels like bank or maybe multi-purpose loan, something like that. So they are really, we call it a virgin market for another offer of the product for another level of microinsurance product. Lesson note number 2 is the seamless integration to the SOP of the microfinance institution is also the key. And starting with small size, with small size of partners, is really helpful for us because we can avoid the high bureaucracy comparing if we start with a large partner. And the other lesson learned is disconnecting the insurance from loan is the key for renewal and loyalty building. Because as long as we only have a bundled product with the loan product, and then awareness is not there. The challenge that we face during we are doing the pilot, as I said before, filter the partners that have a right DNA for success. It is the key for us. And also tailor the product to better meet with customer needs, establishing an efficient renewal process. That's something that maybe we will elaborate later because it will have something to do with the usage of mobile or e-money platform. And also, last but not least, is how to make the customer awareness building tied in with the product sales. This is the challenge that we really face in the future. And as the way forward that I can mention in this forum for us, later we have